Hey, good afternoon, everyone. Greg, I don't hear you or see you.
I wasn't doing anything. I thought you were going to start this since this was, you had created this Tesla
Oh,
thing. But
oh no, it doesn't matter. I was talking about the one slide, but no, let's do it. Um, but yeah, good afternoon, everybody. I'm Dan. Greg here as always for our weekly MT Live, and we've been doing as you know for over 8 years, and we always pick an individual topic to focus on, which is part of the collective approach, which we will obviously go through again. But what's very interesting of what we're going to cover today is it kind of culminated in actual trades, which turned into beautiful analysis and application of everything we teach in real time. All the concepts have occurred over time in this Tesla example. So I actually got the idea, and Craig and I alternate coaching for our subscribers. It's free of charge for all our subscribers every month. And then I focus more on option methodologies. And so there's a few charts in here that I created for purposes of a detailed analysis for coaching. And then I just kept it going and said this could be a marvelous MT Live because as you'll see, as I just mentioned, it's going to include an analysis of everything of what we do, but with real examples of directional and option trades, buying options, selling options. So let's get to it, Greg. Um, so here's our, and it looks like I grabbed an old one here, but this is our slide we start with every time for obvious reasons, because this is a summary of our technical approach to trading anything that moves. Now, there could be a summary for anything you do. In any skill that you have, from playing basketball to being a doctor to trading, involves a systematic, objective approach that is grounded in proper education. And that's what Greg's MTS course does. So this is just a snippet summary of what that process includes. So
yeah,
we
let me, so since you explained it as far as the course goes, and we cover this every single week, this particular slide, because it's the essence of what we do day to day and teach. So each one of these concept sections has obviously, I think obvious, that you cannot cover just price is king in a course and just say, hey, that's a candlestick pattern or whatever. Every one of these sections has multiple subsections within it. So for example, trend analysis would have attributes of determining what is a trend. Is it up, down, or sideways? What is a quality trend? What isn't a quality trend? So everything gets dissected into little bits and pieces to explain what I like to call the thought process. So rather than us saying, hey, you know what, buy this system that'll tell you when to buy or sell, right? Which, we've seen how those go over the years. They come and go all the time, just like indicators. But um, we teach you how to think, meaning this is how to clearly define an uptrend, a downtrend, a sideways trend. This is how to clearly define these particular candlestick patterns. These are failure patterns. These are continuation patterns. And that's, I could go on and on and on for the next hour for each one of these things to explain, but you get the idea is that this is like saying, hey, here's college, right? And it's like, out of your 4 years of college, these are the courses. And so when you get into the course, now you get into the meat of everything and put it all together. And like I said, I like to call it a thought process to say, hey, yes, I understand price is king, and I understand that's a particular candlestick pattern, but if I can put that pattern in this location within this trend showing relative strength, we begin to build a strategy. Go ahead, Dan.
So this is the first one or two lines of that last slide. We're picture people. This is, Greg just said it, we're not this subjective analysis looking for these magic indicators giving buy sell signals. You know,
Dan, this is like, this is, of course, my pet peeve with indicators, and this is the ultimate in bullshit. All right, so I have to be direct about it, but you know what? We're all susceptible to this. It's one of the biggest hurdles with trading because most of us, I know I did, come from a point of view of knowing absolutely nothing. And the stock market, I think for most of us, it was for me, is a mystery. But I believe there was some kind of secret behind it. And if I knew the secrets, I could make a lot of money. And as you get into this and you start hearing about different indicators and optimization and this and that, or this craziness, we tend to gravitate toward this kind of thing because we believe that there are these magical indicators and things that'll allow us to make money easily and tell us what to do. And nothing could be further from the truth. I mean, look, we have ourselves to overcome just based on being human beings and how our brains are wired from a young age and the things that we're told to do and not to do and so on. And it doesn't work well when it comes to trading. So there's a whole new way of thinking that's involved in this. And all of this indicator-based methodology just adds to, the odds are against you. Why, many would say, why are you even going to try, right? If, 90% of the people don't do it. Well, one of the biggest things is understanding why 90% of the people don't do it. First of all, your brain isn't wired right, so you have to learn that. And then you're told about stuff like this. And that's not today's subject. Certainly could be one, an empty live, but I just wanted to share that because you might think that it's not possible to do this, but it is if you start removing this kind of garbage.
exactly. It's like I can't even make decisions on these candlesticks with all this junk in the way.
Well, that's why they sell courses on it. So, you spend $1,200 or whatever it is to learn how to read the colors and the lines.
Right. All right. So again, this slide. So these are all 9 bullish pictures. Purposely don't show you the time frame, what it is. It applies to anything. So, and we have more than this, obviously, but each one of these are a compelling arrangement of candlesticks, and that's what we read. Why? Because a candlestick, we don't trade one candlestick, we trade a combination of them because they paint a picture of the collective market participants summary of supply and demand on that time frame. And that's what we're trading, supply and demand with high probability setups. So, we're going to be talking about this with Tesla today in this case study on different time frames and overlaying those other concepts from the first page, of course. Just a slide on background information because we're doing this Tesla thing. So uptrend, downtrend, sideways trends. This is in Greg's course. we in the foundation, obviously. And these are the only movements we say that a stock can make. And so when we're teaching little Johnny or little Johnny's father, we teach the definition of these and how to recognize them and what the trading strategies that we're going to use in each one of these phases. Uptrend. is we define as higher pivot highs, higher pivot lows. This sideways, relatively equal highs and lows. These are all the transitional phases between these top three. That's that simple. And then we're looking for these patterns that I just showed you on the prior slide, the different patterns and strategies in one of these 7 stock market events. All right, so in Tesla, you're going to see a bunch of these. Now, this is actually a slide. I mean, I know it looks like a lot, but remember I mentioned the coaching and then the introduction. So this is a slide we went over in great detail in our MT Live, and you'll see on the next page, you know, we have quizzes here and so forth. But let's just talk big picture right now, particularly since I just showed you that picture of the 7 stock market events, right? So so all of our daily charts, color-coded candlesticks, volume, and we show you can see it way up here on the left. The blue is the 20, the green is the 50, and the red is the 200. So it's short, intermediate, long term, just a simple moving average, which we teach in Greg's course, you know, how to use that to speed up the process. So this Tesla collapsed. There was a ton of bad news. They were going after Elon Musk. I mean, bad sales in China. So this is a nasty downtrend. Let's just talk about a couple of points, and then on the next slide, we turned it into a quiz, which we're going to go over today. So why is Greg doing that after a huge decline? And then let me give you a hint. We don't call this major support until after the fact. It was not major support here, but the weekly chart was what we call a climactic sell setup. So if you look at the prices over here, this wide range ending at $220 was on major support on the monthly after a climactic buy setup. So that got our attention. Start watching. It was not an action point, but go ahead, Greg. Why did you do that?
Well, this isn't an MT Live on candlesticks, but since it was marked on the chart, a wide range bar is a heads up that the trend is likely near its end. Now, those of you that are observant might say, well, Greg, Dan, isn't that one a wide range bar? Absolutely. And so we can see that the momentum stalled, but it wasn't the turning point within Tesla.
Pay attention.
Yeah. So when I was talking before about these different concepts about here's a pattern in a particular location with a particular trend, and that builds strategies, which is in essence a thought process. It's like, well, if I look to the left, which I can't see on the daily chart, but I can see it on a weekly chart.
Right.
And I see a stock that has been collapsing into an area of support, and I see a wide range bar, it becomes a light bulb moment. Watch this stock, whatever it might be. It doesn't matter that it's Tesla, just a great example, right? So it's like a heads up to start watching what's going on at that point. And so now we start looking for clues, tells, right? Oh, a wide range bar in an area of support after a climactic move to the downside. This stock is going to start stabilizing here.
Right. So let's go to the next slide because it's a microscope now with some quizzes, which I went over in coaching. All right. So where's my A? Okay. So that's the one you were just describing. Wide range ending. So typically after a multi-bar big decline, wide range. And remember, everything applies up or down. So wide range up, which we can show you later on a different stock we've been playing around with. It means it's like the thing, think of the psychology. It's the it's saying, it's suggesting it's the last of the Mohicans getting shaken off on this, in this case, to the long side. Who knows where they got in, but they're like, I can't take this pain anymore. And you get a wide range selling bar on increasing volume, and it's haha, a turn is near. So B, what is this? Well, once, and these are just communication concepts. It is not a buy or sell. It's a let's talk about it, because this is a case study of a look. It's an analysis of a bottoming pattern. So this went sideways for 2 weeks, gapped up and closed with a wide range bar. That's what it is. Now, again, that's different than a setup in an action. I'm not doing anything here because it's rallied to this resistance, went sideways, made a new 4-bar high and got rejected at resistance. So that's telling me it had a big move, bottom of the range to the top of the range. That's telling me it looks like a trading range. And whether we want to do some bear call credit spreads over resistance, could be one strategy. But would I short right there? No, it's just not high probability.
Well, Dan, I mean, that leaves a lot of open-ended questions for somebody to say a high probability. And of course, this isn't the course, but just a short answer for those to understand why isn't it a high probability? Well, we already covered some of it. It's a climactic buy setup, right, on the weekly chart. It's bottoming on, which we can see the detail on the smaller time frame, the daily chart. And in addition, when something rallies 100% to a prior resistance area, it's showing some kind of strong demand.
Mhm.
So that's not a reason to be shorting, even though we know that there are going to be sellers there. And so, down here where it began to bottom, where I drew this rectangle here, as it begins to move up at B, you might think, Dan mentioned a call spread up there. Well, down at the bottom, you would also think a put spread.
100%.
Yeah. So there are setups, right? Chart setups that point us to what I've already explained and Dan has explained, but it doesn't mean directional trade, not yet. But we could utilize the instrument of a credit spread, because that, in essence, is just, hey, how can I determine where prices aren't likely to go within a certain amount of time?
Right, and we'll show you some more current examples of that. But yeah, on this letter G here, a 180 reversal. Remember the slide of 9 patterns, bullish patterns? A 180 reversal was one of those 9. And that's defined as a big ugly red bar immediately reverse the very next bar. So that's telling us that there's so much buying down here. When it traded over the high of this red bar, I am very confident of selling a put spread, which, as Greg said, we're going to go through our checklist, sell an out of the money put, buy a further out of the money one. And we'll talk about that more in a slide or two with actual examples. But we did one here. I just didn't go back in time to grab it. So what am I now thinking? Well, actually at D here, it was a gap reversal. I'm thinking it's above the 20, still declining 50, but I always tell myself, if I were in the green room, we talk about what I would like to see next. So had we got an inside bar on this green on after this big gap reversal, I would have thought it would have broken out then, possibly, but it didn't. So fine, let's keep going. No follow through to this big green bar all the way back down to the low. What are you thinking now, Greg? All the way back to the low.
What am I thinking at that point? I'm thinking buyers had better show up because that's what the chart was communicating, you know, by this price action down here. And definitely a sign of weakness at that point because, there was a nice big bullish bar and it went all the way back down there. But this is just marked an area of major support. So I'm just thinking it should go up. Let's see what it's going to do.
And all the way back to the top of the range. Again, we don't buy from the bottom of the range to the top of the range here, wide range bar to resistance, but it's telling us start paying attention. And I see Don typing here. He's in our green room. And I said this with absolute certainty. Once this bar was here, I said in the green room, I want this to go sideways for a few days at resistance.
Right. 100% retracement, right? So this was a 100% retracement. And then this, right, 100% retracement. So what does that mean to me, right? So when we look at charts, it communicates to us what other people are thinking. Now, remember when we saw the weekly chart, this is a stock that's been crushed, decimated. So it's not likely to go up with, the kind of ease that's something that's in an uptrend. Right? It's a bottoming stock. I'll use my favorite word, they're treacherous. So to see something go all the way back down to the lows again is not unusual. It's actually normal to this kind of price action. And so now when it retraces 100% again, it's like, what is it going to do? And so here, at number C, there was a rejection. And so when it tried to get through that, it failed, came back up again, went back down again. Now it's up at this area. So the thing is, okay, I see strength again, a second time. Now, what's it going to do? It's got to show me something.
Right. This time it did not fail. As of now. Hasn't failed. It's doing exactly what we want. It's bullish consolidation. Notice here my green is my 50, remember? So because of the length of this bottoming pattern, it's now consolidating above both my major moving averages at resistance. I don't know if we've talked about this concept of price void, but it means look to the left. And because it's been crushed on the daily and weekly chart, it has room to go higher. I just typed yesterday, it was at $350.
Was anybody that's listening, of course you all are, was anybody here for MT Live last week? We covered head and shoulders patterns.
Inverse, yeah.
Right. What was one, like, when these MT Lives, as we're discussing all of this stuff, there are things that we say that are very meaningful. What was one of the things that was pointed out about the right side of that pattern? What was different from the left side? Because head and shoulder bottoms are the same. This is not a head and shoulders pattern by definition, but the same thing is happening. And it's a week ago trying to remember that. It gets tighter. It tightens up. And things contract. Volatility contracts. A lot of volatility. And we mentioned that a visual aid was using our moving averages. Look at how tight they are over here versus how wide they are over here. So that's another visual aid that guides us to thinking that the forces of supply and demand are beginning to come together and something's likely to happen where they're going to expand. So based on what we've already explained, the belief is, I believe it's going to expand higher because of that. The tight MAs, exactly, BC. They're getting closer together. So it's just a way of visually recognizing something that's happening. We can see it in the price action, but that's why we call moving averages visual aids. We really don't need them. But once you train your eye to recognize this picture, it guides you to a thought process. And that's just one concept, right? You have to put it together, right? And that's the great thing about empty lives. And again, this particular one being, looking at all these things and putting it together that guides us to a thought. That's what trading is. I look at charts, and based on the chart pattern, the picture, it creates a belief about the future. And that's what we're, in essence, what we're explaining here.
And
And
so,
so, and go and read. I gave you the links to Dan and I's blog post there. Go read the one of mine and that about tight versus loose. I'm not going to get into it here, but you're getting the essence of what we're after here to put together a trade. Go ahead, Dan.
so my bias now, I want to buy a compelling breakout, whatever picture that looks like. So this was our rectangle. I should have put a square around it. And it actually started to break under the rectangle consolidation, right? It's okay. I'm still watching, still above the 20 and the 50. Next day, it went into resistance. Next day, it gapped up and broke out. That's where we started buying the stock, call options, call debit spreads, selling put spreads under support. So right there is, although is not as pretty as I wanted, because you would need a bigger stop, that was our entry for it to go. Went up, you can see, had a beautiful run, going sideways. So this, at the time, was a nice, another bull rectangle consolidation. Gapped up, closing breakout. That's a beautiful bullish pattern that suggested higher prices. And you got two inside bars from a pattern that says you should have gone higher. Came all the way back down to support. Buy setup on support, topping tail, now closing on this support level. What are your thoughts now?
Validating. It's gotten weaker. It's a bottoming pattern. It's not unusual, but the question becomes, can the past continue to evolve into the future? Because I'm working with a bottoming pattern, which it's normal for it to be a lot of uncertainty or not moving with that kind of momentum, because there's tons of people that are sour on this particular stock or instrument, whatever it might be, because it got killed. And so now we wait to see what happens.
Correct. My bias on this is if it were to negate this red bar, meaning trading over the high, I'm back to bullish strategies. If it trades under the low, because of this price void, again, just to say it multiple times, a price void is a big momentum move that leaves little to no significant support to the left. So if this were to trade under this major support, I'm short term wanting to do bearish trades. Let's see what happens. All right, Greg, this is your course. We've been talking about it. Do you want to give a little description?
That's what I've been doing. It started with that beginning slide, and this course covers all of that, plus the subsections that are in there. And as it says, it's one course for everything. So it includes advanced money management, gap strategies, swing trading, investing, multiple time frames, intermarket analysis, market internals for end of day swings, intraday, relative strength and weakness, anything you could imagine that I could imagine, I suppose, other than using indicators is covered in that course.
I was gonna say.
As to putting together the thought process. So it's a big course. It's over 16 hours of education, and it's a lot to consume, granted, but it's there forever. And what I always tell everyone, even though everybody we get excited when we get into something new like this, and you'll try to devour it in a weekend, which you can do. It, but your brain will be cooked. But the beauty part is you can go and listen to 20 minutes of it a day. And that's the real what I tell everybody, go ahead and listen to the whole thing. Trying to, take it all in. You won't remember it all. It's impossible. But consuming a little bit every day, day in, day out, taking notes, looking at your charts, coaching sessions, emailing Dan or I, reinforce this. If you're in the green room, take a look at this chart, relate it to the trend section in MTS and so on. It is not different, BC, it's different from the swing course. So the swing course only focuses on swings and those time frames, the market internals and some of the money management in the swing is the same. But the MTS course just gives it a deeper dive into it. So this course is discounted to a ridiculous amount. You could see the original price. And if you want to do the swing course, which reinforces everything, I think at that link, it's like 50% off, which is like, anyway, check it out. If you want to learn, Dan and I aren't, I'm not going to belate, the subject or barrage the subject as to what you need to do. But if you want to learn, it's through education, and that speeds up things tremendously.
So here's where you left off. I told you I'd be bullish over the high, bearish, short-term under the low. So it gapped under here with this price void I mentioned. I'm playing out plan B. So I'm shorting out of the money call spreads, shorting the stock as a day trade or swing, buying put options, and it just collapsed. On volume. That's an ugly bar. I don't know what the news was that day. So this is the same bar on what I just showed you, but now look, I have 3 slides here. So we're going to dissect this a little bit. So 15-minute chart has 26 bars in one daily bar, right? Just do the math, 6.5 hours. So we were watching this in the green room just crater. I remember somebody in the green room mentioned this one green bar here and saying, "Oh, I'm buying it here." And look at 302-ish, whatever. And I'm like, I do not recommend that. I don't recommend it. This is a power move down. This is an igniting ugly bar, and you don't have support. And then it continued to go tight as a day trader. We said short this low. This is a pattern we call the late day breakdown. Down on the day, can't bounce. You short that as a day trader. And then look, 1500 is 3 p.m. reversal time. This thing got killed. Look at the size of this red bar. Go back to the other one to see more data. That was a ton of selling. I forget what the news was. And look over here. What do you call this, Greg? Look to the left.
Major support.
Should have put a big fat green line here. So we were just watching. Don, you're in the room. You know this clear as day because it was only a week or two ago. We're watching for an intraday turn. We got it. This is what's called a climactic buy setup. It's a accelerated fluid move down that accelerates far from the declining 20, major support, multiple time frames, etc. So we sold 2 sets of put spreads. Now, just Greg said it, but to refresh your memory is when we sell a put, we're taking in money, premium, and we have an obligation to buy the stock at that strike price on or before expiration if the put buyer wants us to. And when things collapse like this, the volatility skyrockets, which means the money we get for selling this put is off the charts. But let's look at the numbers here. Just using round numbers here, let's call it 280. So when this was at 280, we sold puts $100 lower. What does that mean? I'm taking in $1.05 a share, and I'm telling the market, yeah, I'll buy Tesla for 180 bucks. I mean, let that sink in if it doesn't. The stock's trading at 280. Somebody is paying us $1 a share to agree to buy it $100 lower if needed. As technicians, what we're showing you here today in this case study, climactic daily on major support, climactic 15, I'll take that bet all day long.
Dan, I mean, this is the past, but didn't you sell something out of the money call spread this morning on something that was like $100 away?
Yeah, we'll show them. It's like CRWV. It's so I already closed it, so I'm 5 for 5 now. It's no, not CRWV, Circle. Right. So Circle has been kind of the opposite of bullish extreme, and we're showing you bearish extreme. So anyway, on this one, we sold 1 day to expiration and 8 day to expiration. I'm only showing you one, but we actually put on 2 trades at the same time. Let's continue. You've heard me mention the green room. This is where, we give trades to our subscribers, but this is where we find trades, we answer questions, we analyze it, we scan together. That's an amazing place to literally, the saying, you walk the talk, where we're showing you these slides, but we walk the talk in real time in the room. So this is a special. You get 2 months for the price of one and 30% off some other courses. All right, so now climactic buy setup, we sold those 2 put spreads. And this is the next couple of days here, slide 2 of 3. On this green bar day now, gap down. When we say range expansion, it just means look at the size of the bar. It's expanding. So I have a big fat engulfing green bar following this climactic buy setup on major support. We sold another put spread, another one. It's like selling put spreads on this has been like Candyland for us recently. And it was 3 days to expiration. So right where this red star is, we sold it under the low of the green bar, took in 75 cents. We said hourly, this is a closed trade now. All our trades open and close are in the members area. We give the stock, the date, the stock or option trade, tactical setup, and trade management. So you see why we're doing things. Now this is slide 3 of 3. Here's the chart, just so you can put it together. This is the daily. And Greg, you are the one. I have a good memory. You were the one that mentioned this put spread right here. Do you want to explain why? So here's the gap reversal. this green bar, gap reversal. Why did we put on the put spread there?
Well, part of it we've covered, but any time that something collapses, as this did, and it's retested and it reverses, think about what that communicates. And if you go back and that slide, this section here, that was that big nasty red bar. And so when it comes up to this resistance area where it fell from, remember we talked to retracement, so it retraced a lot. So there's strength, but the thing collapsed. It's like it's not going to turn and run immediately, but it creates a support area down here. So I'm automatically thinking it could retest that area. And so, well, this is a little bit more detailed as far as the thought process, but when you look to the left and whether you look at support or resistance, it creates a thought that that's where prices should go to, where it's going to have buyers at that prior low or sellers at that prior high. So when I see buyers step up prior to getting down here, which is the most obvious part, and they come in early, that means the buyers are aggressive. They're anticipating. And okay, great. They're anticipating. How much are they anticipating? I don't know. I need to see some evidence of that. So when it comes back up again and it starts getting tight again, that's where I start feeling, okay, they're coming for this thing. They don't care that it went down the way it did.
Well,
And
and gap down is negating the gap down.
right. So part of the concepts in the course is, and I explain that in the course, is like to help us not get left behind, right? Because once we experience something, the memory of that experience doesn't dissipate so fast. So we need tools that kind of drag us along to help ourselves. Meaning, I see a big, nasty red bar. There's no denying that it's bearish. But as I start seeing other things like retracements, tight price action versus loose, little failure patterns, and so on, it helps me move on from the past and recognize what's happening in the moment to say, you know what, things are different. So that doesn't mean I'm necessarily thinking directionally in this particular example, right? But it lends itself to thinking, well, it's not going back down there. And that's the essence of a put spread. I just think it's not going back down there in this amount of time.
And the beauty of all these put spreads in this particular example is the volatility has been so high because of the fear of Tesla over the last few months. All right, so now again, here's where we just talked about, went up and is now going sideways. What am I thinking in this rectangle? Well, it's kind of similar to the discussion before. If it breaks out, I'm bullish. If it breaks down, I'm bearish. Let the stock tell me what to do. Right
Exactly.
here, it broke out, had a nice, you can see it gapped up from this prior bar, and you can see that it has no tail, right? So 5-minute high, when it broke out, what did we do? Sell another put spread. So we sold the 310. Look at where this red thing is. 310 is under all this. And then we take part of the money we receive, buy further out of the money put. That's what's called a bull put credit spread. We took in $1.20 a share on this $5 wide. If you were to sell 10 contracts of these, $1,200 goes right into your pocket, to your bank account, your brokerage account. It's not free money. You have an obligation to buy Tesla on or before expiration at 310. But we manage these not with the intent of, wow, I don't care if I buy Tesla at 310. You could, but the majority of the time, that's not our intent. Our intent is to keep as much of this premium as possible. So break out of a bull rectangle and had a 1, 2, 3 on the weekly. Guess what? We closed it at the high of this bar. we closed, well, half at 60, half at 20. We took our 21% return and moved on.
Guys, 1 second, Dan, before you go back, guys, think about this. Why might we think something we've already covered already? Maybe we've covered a lot. What is going on with this particular stock and these patterns that would lead us to believe that there's the possibility that this big bearish bar might not follow through? I mean, we know after the fact, right?
Mhm.
But what would make us think that this, where it's gotten tighter, could lead to higher price action? I don't want to not give it a thought, throw anything out there, because we're going to run short on time. We're going to go a little extra today. This is a great session, but I want to bring you back to the analysis, not to forget it. This is why I said watching the course for 20 minutes, a half hour a day after you've consumed the whole thing, because there's a lot to remember. And then, as you're doing the trades, right, you need to keep this in mind, because you start focusing on one thing and you did analysis. The breakdown that failed at support, climactic major support, yes, but it's a weekly time frame. Right? So we've got this weekly time frame that's a giant climactic buy setup at major support.
Yeah,
It's likely to have bottoming action. What does bottoming action entail? Red bars ignored, breakdown failures. So we're looking for clues that would support our bias from the bigger time frame. Right? Let that sink
yeah,
in. We look at a bigger time frame to create a bias. What is a bias? Bias equals belief. So this big time frame leads me to believe that Tesla is going to bottom here, because I looked to the left and there's support and it's extended to the downside. Now I'm looking for confirming price action details in the smaller time frame.
perfect. No, that's a great summary. Thanks. All right, so this is my comprehensive options course. We have courses on buying options, selling options, but this is comprehensive. It covers everything, what, basics, what an option is, buying, selling, trading news, high volatility. And it's the same amazing discount as we're offering on Greg's course. We are technical based traders, not what they call mathematical ones, where they don't have a bias on the charts, which we think is just like an ostrich approach. How can you put on an option trade without a bias of the underlying? So this teaches you how to profit based on your bias of the underlying, similar to what we've been doing with these charts here today. So
Dan, just like my full course, in this full course, it covers everything in the separate courses. And you might say, well, why do you have separate courses? Because look, when we created these, right, the price being extremely much higher from a few years ago, right? People were like, well, you know what? Can you just create a course on credit spreads and debit spreads and volatility, or zero DTE, or buying puts and calls and directional trades and for swings and investing and so on? Well, we did that. That's this course. It covers everything.
right.
Everything, one giant course. So it's a same story, a lot of information. Consume it in one weekend if that's what you want to do, and then go back and listen to it piecemeal over and over again.
And as you said, we give the prior option coachings for both of them, recordings.
Right. What Dan is saying, when you sign up for either of these courses, we will send you the recent coaching sessions. So that's another hour and a half of education to reinforce what you learn here.
All right, so that's it. Let's look at the markets here and let's show them this circle that you mentioned, and I've been doing it a lot, selling calls. And I think curve is getting close. but it's a circle. It's a stable coin, new stock that's been crazy. And so similar to Tesla, high volatility, selling far out of the money puts, we were getting like $4 for shorting the $430 calls on this thing. So it's crazy jacked up premium to the upside because of the greed component associated with this recent IPO.
And that, as ridiculous as that sounds, I mean, it doesn't happen every day. But with a new stock and so many people are interested in it, and there's news and stories behind it, traders go to the options market, and especially, $430. I mean, that's seems retarded to me.
So we gave
When is
it.
it when was it gonna expire, Dan?
Well, we've been doing this Friday, and just today we were looking at next week. So we gave it to subscribers the last 3 days, saying, that's what we do. You can be on the golf course, golfing, and we send you an alert saying now's the time because we're here watching the stocks intraday.
So
And
I wouldn't put it past a stock like this to actually go there, not in a short amount of time.
right,
But when you have
right,
so many people, hedge funds, and so on, creating a belief, and now that these options, they're usually not that far away, aren't jacked like that. That's what makes it such an opportunity.
right. To improve
Um,
volatility.
but they're paying up for those options because their belief is so strong and there's such demand for this particular stock with a belief that it's going to go higher, that greed, fear always goes too far. And that's what you're looking for as a credit spread trader, you know, when things are just so ridiculous. And that's part of the market internals when we look at our market internals to say, hey, these option traders, they're buying an overwhelming amount of put options versus call options, and things have moved up a lot. It's all covered in the course. But as an intraday trader, we look at, ticks and so on. But we're always looking for trends, the trend trumps pattern, meaning I'm not shorting something in a strong uptrend like this. I wouldn't short this. Intraday would be okay, but not as a swing trade because I'm looking for this to be a buyer on a pullback. However, if somebody's saying, I think that this is going up to $430 by Friday
All right,
or next week, I'm like, you're out of your mind.
all
And
right.
they could be right, but that's trading. Right? We
No.
find out who's right after the fact. That seems ridiculous to me that it would go up there in a short amount of time.
And the 15-minute chart yesterday just gave us a no-brainer entry.
Okay. So same thing as you change time frames,
No-brainer.
uptrend, major support, deep retracement, 100% retracement back down again. So everything we've been talking about, it's applicable to the time frame that you're utilizing. And I always like to tell everybody there's no right or wrong time frame. Right? It's a choice. So as an intraday trader, you may not need a weekly chart, probably don't. But are you going to use the hourly and the 5 minute? Are you decide what you're going to use, but the analysis is the same. It's when the analysis lines up, like we just covered, the weekly time frame, climactic on major support, daily time frame, bottoming action type of, tells that tell us what's going on.
And now that I look at it, that was a head and shoulders. You can see right where we entered it yesterday at the declining 20, the death cross.
Frenchie, the course that I posted the link for covers the complete market internals and intermarket analysis. I'm telling you, you cannot find that kind of information in one place anywhere. I would guarantee that. You cannot find that information, candlesticks, trend analysis, support resistance, market internals, intermarket analysis, trader psychology, keeping a trading journal, do yourself a big favor, step up to it because I'm taking it off. By the end of this month, that these courses will not be available, meaning those prices will not be available. The pages you can find, but the coupon codes will not work. It's tremendous. I mean, these courses are what Dan and I have put our lives into. Not complete our lives, but you know what I'm saying. As far as the markets go, it's all in there. All right, so look, we got a few charts up here. So we looked at intraday. Somebody posted something in here. BC wanted to look at UPS.
Yeah, whatever you want.
So this is bottoming. All right. Now I look at the weekly chart, see what's to the left there. So it's getting close to support. It's not quite there yet. It's close. That's okay. So, you know, it's not always an exact thing. So that's a plus. Is it climactic? Yes. This part of it accelerated lower. It's multiple weekly bars there. So now go back to the daily chart and we see a lot of sloppy price action. Right? Deep retracement, took out the highs, back down again, back up again. Now, so far, the pullback is onto this minor support. It's not pulling back to major support, which is down here. So now it's gapped down today, right? And so now what should happen? You apply the same thought process to that we went through with Tesla. What should happen? Well, one of the things that could happen, well, why didn't that draw? Let me get something else here. One of the things that could happen and probably should happen would be something like this. And if we were to see a bar like that tomorrow, put spreads, maybe you want to buy calls going out a month. Maybe you'd want to do a debit spread, just buy it. So the vehicle that you want to use, right, is up to you. Some traders primarily like doing credit spreads because it's a simple strategy. If it doesn't go down here, you get to keep the money. If I'm going to buy it, it's obviously the stock's got to move and it's got to go up. Right? It's got to go to a higher price for me to sell it. Whereas for a put spread, as long as it doesn't go down there by a certain amount of time, you get to keep the money. And I guarantee you, if this has a bar like that by tomorrow, Dan will be posting a put spread if there's premium
Exactly right.
down here. Right?
Exactly.
FedEx reported, look at the cousin. So this is the cousin.
And
Right?
that's why it gapped down today, right?
Yeah, FedEx gap down, but that thing's been beaten up for the longest time.
Yeah.
And I'm wondering, could that be an exhaustion gap? And look, it's being bought on the gap down. And that would reinforce what I just said. Could it be an exhaustion gap? Let's see where this closes at the end of the day. So it's coming into resistance where there's going to be sellers, but if it can close into that resistance, I'm just going to set an alert here a little bit higher. And if you look at the 15-minute chart, you see there's going to be sellers. It's that resistance, you know. So that's part of the thought process. You look to the left, it's coming up to what it was holding. It broke down through it. There's going to be sellers there. Now, if it goes sideways into the end of the day, whatever supply came in, buyers were stepping up there saying, I'll take it, I'll take it, I'll take it. If it's down here at the end of the day and it looks like a big topping tail bar, clearly buyers lost control. And it was just buying the gap down on support because that was a short-term opportunity. Right. So that I set my alert. I don't need to watch this anymore. You know, see what it does. And we'll see if it goes up. Want to do a credit spread? We'd look at premium. And so we just open up an option table and go in here and start looking, for just puts. I guess you could even do an iron condor, whatever, you get the idea. So that's iron condors are another way of utilizing credit spreads that's covered in Dan's course. So there you have it, everybody. I hope you enjoyed this MT Live. A lot of people have asked about this, a bit different as to a case study. So I'm going to make it available to everybody. We'll send it out so you can review it. Let's go over it again, but definitely the short, fast lane is the courses. And so check that out. We'll be back next week. Talk then. Bye-bye.